Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, December 1st, and we got a couple economic news releases. Remember, Friday will be the big one because we have the jobs numbers, and that will be the last big data that the Fed that could reverse or keep on course for an interest rate hike later this month with their meeting on the 16th. But today we got some manufacturing news. We'll start off with the market PMI for the month of November. We had a 52.6 back in October, and it went up just a slight here, so basically still within the same range at 52.8. So anything above 50 on this index basically is considered expansion. Anything below that is contraction. So we're just hovering above an expansion according to the market flash PMI. Now, on the ISM, on the other hand, we show a dip here and actually on contraction, which is obviously not good news. So a little mixed reporting here. We had a 50.1, so just barely treading water there, and forecast supposed to go up slightly more to 50.5, and actually went backwards and contracted to 48.6 in the month of November. And last but not least, we got the construction spending. This is actually for October. My apologies, I put November. It should be actually for the month of October. We had a 0.6% increase in September, and the forecast for October is supposed to carry on another 6.6%. And actually went further, 1% in the month of October. So good number in construction, but manufacturing not as good as we were hoping. Market's up today. A lot of it is they're forecasting good job numbers, but keep in mind that for November, we that's when we start getting a lot of the temp jobs for seasonal for the holidays, and then around January or so we start seeing a lot of the people go back to unemployment line. So we get a lot of people getting jobs, but it's only for like 2 months of the year, which really doesn't do us very much. So it can be a bit misleading. So you have to be careful with November and December's jobs numbers, but they're anticipating some good numbers this week. There's a few Fed members having some speeches later today, so depending on what they say, if there's anything that could surprise the markets, that could change or alter where the markets are at so far. So let's take a look here. Even though the stock market's up, the bond market's actually up, and a lot of it is also getting a little bit of a boost from now the news what we got. But there's also going to be some Fed buying, so the Fed's going to be purchasing some of the bonds out there, and that's going to help provide a little bit of a boost. Now, right now, we started the day lower than where we left off yesterday, which is obviously not that great of news, but we are up. Currently, we're about 13. According to the charts, we're up about 13, but since I created this chart, I decided to jump up even further, up to about 22 basis points. So we're even up higher than where this chart is right now, which is a good sign for us. So I'd be very cautious. We are approaching that level where the 200-day moving average, so I would start being very careful in that range once we start approaching that 200-day moving average, as that has been proven to be a very tough resistance level for us to pass. So that we are starting to reach that point. So be very careful in this range here if you're floating your interest rates. Otherwise, right now we're looking pretty good today. All right. So basically today is improvement in the interest rates. Well, we have a nice improvement. We got the double whammy. We got good stock market today and good interest rates, improvement in our interest rates today. All right. Have a wonderful day. Thanks so much for watching. We'll see you guys tomorrow. Bye bye.